Hey everybody, Futures Brizio here, back with another video, and this is a kind of anatomy of a breakdown on just one pair, and again this is Euro Canadian, and I did take this trade, although I will tell you I didn't get all of this move down because I was so busy watching my futures stuff today. I did take it, but it was a little bit late, but this is a textbook structure setup, and the other reason why I didn't totally catch this because I don't like how this pair is currently range bound on the higher time frame, which I try to stay away from. But this one certainly yesterday and today was tradable. Yesterday to the upside, today to the downside. You can see how impulsive these moves up and down were. This is what I don't like, all this chop in here. I mean, I could care less about this. I'm not going to sit here and try to figure out what this is doing. I'm waiting for these impulsive moves up, and so that's what we had yesterday and today. Yesterday was up, today was down, but we're still inside this range. So I just wanted to stress that. If you go out to a 4-hour time frame, you can see this thing has been inside this box since basically like late December, mid to late December. We've been trading inside this range. We had a little fake out yesterday, or actually no, earlier today, pre-New York, but we are now still back inside this range. So as long as this thing's trading in this range, not exactly anything I'm totally interested in, but you can see the impulsiveness of the last 2 days. Again, straight up, straight down. So let's just look at today, and you can see what we had here. We had price go up, and we were heading into the New York session. So New York session started on this right there, on this candle right here. So this is all pre-New York. We can see price came down here. We had this little tracement, came up, made a new high, poked outside of this trading range. So this was a liquidity sweep, sucked in all people to go long right here. In case everybody thinks that, all the breakout traders that think this thing's going long. They come in here, as soon as they see this thing pop, they buy right here, or they wait for a pullback candle, and then they're buying again like in here, and then they got slaughtered right here, okay? All right, so this is a really classic, nasty liquidity grab and sweep right here, fake out, whatever you want to call this, okay? So as price was going up on this last leg, it formed this structure low right here, right? We had at least a few candles pointing down, so you can draw this as a structure low. Okay, it's pretty obvious. I mean, you kind of had one here, but this one is better because there's more candles. It's more obvious than this one is just kind of like an internal one. So you can draw this line right here, and then price breaks it right here with this really strong candle. Now you're going to be like, well, we never got a pullback, so how would you enter this? Well, you would have gotten a late entry no matter what because of how, and this was news driven, okay, that's why it was so impulsive. But if you look really close, now this is why you have to go down to shorter time frames and look for these entries, because if you look close here, there is there's a big wick right here, okay, and this is on the opening candle. This is the 8 o'clock New York time candle. This whole candle from here all the way down to the bottom of the wick is all one candle, one hour candle. So even in here, there was an opportunity during the first hour of the New York session to enter this downtrend. Okay, and so you have to go to a shorter time frame. So let's just put a rectangle around the wick. So this is basically the wick action, essentially right there. All right, there it is. And we'll go down to like, say, a 5-minute time frame. All right, and actually we can extend this down even further. So here's the corrective period right here, okay? All right, so you can see what happened here, and you can see I already had this drawn from earlier. So price came down really aggressively, and then we saw this pullback right here. This is the 5-minute time frame, boom, boom, boom. We saw at least, 3 candles in the yellow direction. And now we can go to an even shorter time frame. Let's drop to a minute. And look at this correction right here. So again, here was that big drop, and then here was that wick back to the upside. We had this price action back up. And what we're waiting for is a change of the structure going back down. So here was the corrective move up. This structure right here, this low right here, was the last move on this corrective move back up. So you can draw a line right here, right? You say, okay, price is still going up, all right? And you're like, well, how do you know that this was going to go back up? Well, if this low had never happened and price just came shooting right down here, then this would have been your structure low, and you would have entered on the break of this structure. But it never got down here. It kept going up, okay? So yes, I am looking at it in hindsight, but it's still valid because, like I said, if this had just chopped around here and then broke lower, then this would have been your structure low. But it didn't. It broke out of here and then made this uptrend. So then every time it makes a swing like this, that becomes your new structure low. So basically, on this 1 minute time frame, as soon as this was broken, like whether you wanted this candle, this is a 1 minute chart, so this is a pretty small area. Anywhere in here would be your chance to go short. And put your stop above this swing, and you can see you had a little teeny tiny retracement, all right, and then it just continued down and to where it is currently, all right. And so that was your entry. So this is a perfect textbook example of how you can do that. And you have to wait for those pullbacks, right? You got to wait for those pullbacks. You don't want to just enter this thing down at the bottom of this. It's a terrible fill. And yes, it would have worked out for you anyways, but you were really buying at a discount when price had already fallen, instead of waiting and going to the shorter time frame and wait for this pullback, which you got right here. Okay, when price came up, hit this little structure high right here, and then it dumped again. Okay, so instead of buying it down here, okay, you bought it, selling it down here, you sold it up here. Okay, and you got all this extra, and it's just better risk to reward ratio, because now your stop loss, if you put your stop up here, it's only this far instead of all the way down here. Now again, these are short time frames, so it's not a huge difference, but depending how big your lot size is, what you're trading, it's the difference between a 34 pip stop loss and a 20 pip stop loss. So it's 15 more pips in your pocket potentially. And again, this is on a short time frame. If you were doing this on a higher time frame, let's say you were analyzing a 4-hour or 1-hour entry, that could be a really significantly bigger stop loss. This happens to be a 5 minutes, so you say, 10, 15 pips, what the hell do I care? Well, you would care if your risk to reward ratio was constantly out of whack, or you were trading a large lot size, had a lot of risk on the table, or you were doing this on a longer time frame. Okay, you would care. So, so when you see that and you see these super impulsive moves on the longer time frame, in this case 30-minute, 1 hour, and you're like, well, how am I going to get into this trade because I missed my opportunity? Well, there was your opportunity. And in reality, now that I'm looking at this, you actually could have had an opportunity on a 30-minute chart right here. Let's go and look at this. So now this is the 30-minute chart. Okay, and I'm just doing this as we're speaking here, so let's see. Okay, so this was the opening candle. And now we break this 1-hour candle into two 30-minute. This bearish candle was the opening candle. You can see it broke. This is where it took out structure. Okay, and we go down to the 5-minute. And then we have price come back up right here. So we broke structure here, came back up into this zone. Okay, and now we go down to the 1 minute. And here's our structure break on the 1 minute right here. So you could have entered here. So your entry actually could have been like right in here, which again is not a huge difference. You would have waited for the close of this candle as opposed to here. You would have picked up an extra 20 pips on this trade. Okay, so that's another reason why, like I said, you don't want to just blindly enter on that bearish candle and get that FOMO where you're like, oh, this thing smashes down immediately, and you take your sell right here. And again, this one, it would have worked out for you in this case. It kept going, but you left a lot. You probably left half the move on the table. So instead of doing that, you see that big impulsive move down, go down to a shorter time frame and look for those retracements on the shorter time frame and wait for those little pullbacks. They're going to happen. I mean, this is a 5-minute chart, right? 5, 10, 15. This took about a half hour for this retracement right here. And if you took this one, it's 1, 2, 3, 4. This is like 25 minutes. You would have had to just wait 25 minutes for a pullback, and you would have had this nice fill. And if you missed that one, then you had one more opportunity right here. Again, about a half hour price pulled back, and then it fell out again. Okay, so this is just a really nice market structure trade. Okay, in this case, for this pair, they're trading inside of a range. All right, it still gave you a really nice move. Okay, and this was really nice. Okay, so again, I did take this trade, not as much of it as I wanted, but I felt like this was great to make a separate video on, and just to talk about just visualizing market structure and just taking what the market is giving you in terms of where price is going, not worrying about, okay, well, what did it do yesterday? I don't care what it did yesterday. I'm looking at this really super impulsive move down, and I'm waiting for this to confirm through a little pullback and then entering into this trade, and that's what we did here. So, all right, so I'll leave it there, and I hope that was helpful. Smash that like button again and hit subscribe if you're just finding the channel for the first time. Any questions, comments, put them down below, and I will talk to everybody soon.